All right, what is up, party people? Welcome back to the Small Acts Podcast. And you guys know me. I am not here to sugarcoat this business. And today I'm going to drop something that might sting a little bit. Most of you listening probably shouldn't be investing in multifamily real estate. Yeah, I said it. And if you're thinking, wait, what? Nico, aren't you a multifamily guy? Hear me out. Multifamily investing has been put on a pedestal by gurus and social media for the past 10 years or so. It looks sexy, cash flow, financial freedom, fancy words like syndication. But here's the reality, gang. This is a brutal game. It's slow, it's messy, it's risky, and most people just don't have the stomach for it or the time. So today I'm going to break down exactly why most people should not be in this game. And then I'm going to tell you who should be in this game. And at the end, I'm going to give you a simple way to test whether or not you're really cut out for this game using my free multifamily deal analyzer. All right, let's just call it like it is. Multifamily is not about easy wins. And here are some hard facts. Years of grind. Guys, you can spend years underwriting deals, networking, making offers, and get nothing. I've looked at hundreds or even thousands at this point of deals where the numbers just didn't work, and that's normal. Again, it took me 3 years to the day of making many offers monthly to finally get one offer accepted. And when that offer got accepted, it was absolutely no walk in the park. And today, this was back in 2023, and closing that deal was complete insanity. I had weeks of sleepless nights. I had to do what I had to do to get that deal closed. It was a $2.6 million raise. I had never done a raise like that. So it was complete insanity. And there was a lot of money on the line too. When money goes hard, gets real, okay? And now, 3 years later, we're still doing it. We're still grinding on this property. We're still trying to make it work. There are delayed rewards in this game. Even if you land a deal like I did, you don't see money in your pocket right away unless you get an acquisition fee if you're doing a syndication. And even still, that acquisition fee should be placed right back into the deal. Years of grinding, years of asset managing, fixing problems, paying investors, dealing with investors that are unhappy, dealing with investors that are happy but just want too much information, dealing with insurance, dealing with taxes, dealing with the headaches of contractors, dealing with people that rob you, dealing with tenants, dealing with so many different partners on your team that might be challenging, dealing with hurricanes, dealing with other potential issues. Guys, this is just off the top of my head. Can you imagine the issues that might come up when you're owning and operating a multifamily apartment complex? This is high risk. You can lose money. Remember, I lost 60 grand on one deal. That's not a typo. $60,000 gone. And I'm still here, still swinging my axe because that's what this game demands. And if you are not up for this, if you're not up for tenant and property headaches, dealing with delinquencies, broken AC units that cost $5,000 each, roofs that leak in the middle of Florida during hurricane season, this is not HGTV, fam. This is war. And if you are not into this, don't do it. Just invest passively. Guys, there is a huge emotional toll that this game can take on us. The constant no's, the brokers ghosting you, sellers laughing at your offers, banks tightening up and saying, no, we're not going to finance this deal, or we're going to change the terms on you last minute. So it makes it really challenging to close the deal if you don't build a thick skin. If hearing no crushes your spirit, multifamily will chew you up and spit you out. Now, don't get me wrong. I'm not saying no one should invest in multifamily. What I'm saying is there is a game for every specific type of person. And here's who thrives in multifamily: the hungry ones, like me, people who wake up every day with a chip on their shoulder, ready to grind. You need grit, plain and simple. You need to stick it out. You need discipline. You understand that it might take 10, 15, 20 years, but you're here for it and you're not giving up. That's me. The patient ones, this is me too. You've got to be okay with waiting years for results. Delayed gratification has to excite you, not frustrate you. This is the marshmallow test, peeps. If you're unfamiliar with the marshmallow test, look it up right now. Go YouTube it. What is the marshmallow test and how it proves success comes to those who wait? The learners, guys, this is a game for people who can underwrite 100 deals and learn from every single one. You will win eventually. You might not win today. Well, you're not going to win today. And if you get discouraged after underwriting 2 deals and thinking that I need a deal already, you're not going to make it, guys. You have to underwrite 100 deals to maybe land one. That's the thing. 100 deals, you might land one. And this game is for the resilient people. You need to be able to take losses, embarrassing setbacks, humiliating no's, and still come back swinging. If this is you, then maybe multifamily is your lane. Now, here is the silver lining. If you don't want to get involved in any of this, you don't have to. You can be a limited partner. And I highly recommend everybody come in as a limited partner to learn. It is somewhat ballsy for people to come in and say, hey, I'm just going to be a multifamily owner and operator right away. I honestly don't think that that's for everybody. Based on what I just told you, and those are just basic things, me spitfiring for the past 3, 4 minutes. Those are the basic things that I deal with. Can you imagine the ins and outs of every single day while trying to juggle a W 2 or multiple jobs, a W 2, a side hustle, and a family? Now, mix in all of this chaos with multifamily and teams and all the other things like the lending environment, the economic conditions, the current down cycle that we're in for the market cycle. Throw in the high insurance rates, throw in the higher cost of building, construction, renovations. Throw in the fact that lenders are not willing to give it as much proceeds as they used to. Throw in the fact that it is really difficult to raise capital today. Are you sure you want to do this? Perhaps you can get the same or better returns as an LP. For example, if I come into a deal as a GP, let's say I put no money in, I am a general partner. I'm going to own and operate this thing. I try to raise the capital. I make it happen. I close the deal, right? My LPs are seeing all of the returns. Every single dime goes to my LPs until we hit a threshold like a preferred return. And if today's market is as challenging as I'm saying it is, meaning extremely challenging to maintain occupancy, lower delinquency, collect rents, to keep expenses down, if it is extremely challenging today, which I'm telling you it is, how am I going to make money? If I only make money when I surpass my preferred return, if I only make money when after paying my investors, how am I going to make money as an owner operator? Now I have experience, not that much, 5 years owning and operating properties. That's my experience. If you have no experience, you're going to be in the same, you are guaranteed to be in the same boat that I am, or even worse. Okay. So it is extremely important to understand that LPs get paid first. You might just want to be an LP. And the benefit of that is you don't do any work at all. All of your work is done as an LP upfront by underwriting the team, analyzing the team, who you're going to be investing with, and the deal itself. Okay. You look at the deal, you look at the team, you look at the market, you understand the overall economic outlook of today's environment, and you invest as an LP. That's it. You're hands off, hands free. You can get distributions every month if that's how the distributions are going to occur. You can get distributions quarterly if that's how they're going to occur, or you're going to get no cash flow, but you're going to get upside on a refinance, upside on a sale. So as an LP, it is much safer for you to invest that way. Another thing to note, as an LP, limited partner, you don't have to sign on any loans. I do. I have to put my personal guarantee on these loans. So if things go south, it's on me, not you. Okay. The only thing that you're risking is your capital. I risk my capital, my reputation, and my personal property. Very different than what you're risking. Now, I also invest in my deals. So I'm not just a GP. I have to be an LP for the exact reasons why I just stated earlier. LPs get paid first. So I trust myself as an owner operator to invest in my deals, and I invest as much as I possibly can, whether that be my acquisition fee or whatever capital I can scrounge up to put in. This, for me, is going to take 10 plus years. If I want to see my number of freedom, my financial freedom, my definition of what a true investor is, I have to wait 10 plus years, because I'm not starting with hundreds of thousands of dollars or millions of dollars. I'm starting with basically nothing. Now, everything that I earn and make gets rolled back into my deals so that I can continue to build and grow that wealth. It's going to take me 10 plus years to get where I think I need to be, $2 million plus invested at a 5, 6% return. That's my goal. And you know what? It might take me 20 years, but guess what? I'm going to be here for 20 years. You're going to hear my voice on a podcast for 20 years. You're going to see all of the deals that I put out if you're on my mailing list for 20 years. You are going to see all of the resources I create for 20 years. I am here for the long haul because this is what I love to do, number one. And number two, this is what I have to do to achieve my personal financial freedom goal. You might have different goals, right? And that's acceptable. You're not going to be rich in this game as a GP or an LP if you don't start with a lot of capital or put in 10, 20 years. It's just how it's going to go. That's what it takes. And if you cannot deal with it, just be an LP and you will honestly build wealth faster than me. Here's how you're going to figure out whether or not you're cut out for this game. I built a tool called the Small Axe Deal Blade. It's free. And here's why it matters. It forces you to face the numbers. Here's what I want you to do. I want you to download this multifamily deal analyzer. All you have to do is send me a DM and I will send it to you via Facebook Messenger. Pretty simple. If you want to email me, it's info@smalaxecommunities.com. If you email me, I will send you this copy as well. So there's two ways to get this deal analyzer. You can email me directly, info@smalaxecommunities.com, or you can DM me on Facebook using Facebook Messenger at Nico Salgado 456. What I also did was I created a Facebook group just for this specific deal analyzer and anybody that wants to be involved in a community of investors. Guys, this is basically a free mastermind. You need to join my Facebook group. How do you find the Facebook group? When you get my deal analyzer, there's a link at the bottom of the main page where you will see, you click on the link and you can join the Facebook group. Right now, there's like 2 people in it. I have not even pushed it out. I just want to start growing it. I literally just created the banner for it yesterday. So yes, it's ready for you to jump into. So get into my Facebook group now because it's going to start growing quickly. I have not pushed it out. I have not invited anybody to it yet. So just click on it and I will accept you in my group. Download my multifamily deal analyzer when you get it and run a deal through it. Maybe something you see on LoopNet or Crexy. Put in the rents, the expenses, the debt terms. Watch how the numbers move. If you find yourself fired up by this process, if you love tweaking the assumptions, seeing how NOI and returns shift, that's a sign that you might belong in this multifamily space. But if you feel overwhelmed or bored by it right away, if you'd rather just swipe through Instagram than put numbers into a spreadsheet, that's your answer too. Multifamily may not be for you. Yeah, there are other jobs on multifamily teams besides deal analyzing, but you need to understand the numbers. And if you don't understand the numbers, or at least enjoy it a little bit, I'm not saying you have to do it forever because you can find a teammate that can do it for you. But if you don't understand it and enjoy it a little bit, this game is not for you. This analyzer that I created is not just a spreadsheet, guys. It's a filter. It'll show you right away if you're wired for this game. Now, of course, there's a learning curve behind it. And I have a video that I can share with you to understand how the deal analyzer works. And yes, I'm going to be hosting a webinar for everybody that wants to learn how to underwrite deals. And I will probably do regular webinars as well, or at least go live a couple times a month to show people how to use my deal analyzer, because there is a learning curve for sure. But if you don't like it right away, and if you're not into it or interested in what can happen when you plug in numbers, perhaps deal analyzing is not for you. And perhaps this multifamily real estate game is not for you. That doesn't mean you shouldn't invest. Everybody who likes real estate should be investing either in their own properties or as a limited partner. And again, guys, I highly recommend you start as a limited partner and even continue as a limited partner. I will be a limited partner forever on my deals and other people's deals. It is the way that you can grow your wealth. It is the way that everybody can grow wealth. Again, this is not a get rich quick game or scheme. Multifamily real estate investing takes time. You have to be patient. So here's the deal. Multifamily is not for everybody. And honestly, that is a good thing because if it was easy, everybody would be doing it. But if you're hungry, disciplined, and willing to put in years of work with no guarantees, then this business can change your life. Go grab my free deal analyzer. Test yourself. DM me your first deal run, and I would love to see it. Maybe even make a post about how you used it, and I would love to highlight that. And if it feels overwhelming for you, no shame. Let's find you another path. You can be an LP. But if it lights you up, welcome to the grind, guys. This game might be for you. And that is it for today. I want you to stay sharp. I want you to keep swinging that small axe. And I will catch you on the next episode. All right. And that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.